Hello. It is. I got a bulldog last time. Did you? Come on, come on. Stay right here. I'll trust you.
Good afternoon. This is Mary Swope, Executive Director of Mississippi Economic Development Council. I think all of you know who I am, but thank you for being on the call today. Gwen is on the call as well, and we are here at MEDC to help you guys in any way that we can, to share information and to be a conduit for you of resources over these last few weeks. I know all of you have been working very diligently and tirelessly in your communities to help your small businesses, your manufacturing companies, your industries, and just everyone in your community to get through this time. We are all in a learning curve together. And so we want to help you as much as we can. Part of that learning curve is the new Zoom calls that we've all been doing and learning. I have to say, I have to share that if my 80-year-old stepmom on Sunday, if I can talk her over the phone how to download it on her phone and get her on a call with 7 of us Sunday afternoon, I feel like anybody can do this. So, but if you need any help, just let us know. This is just going to be an audio call. So you probably don't want to see me. And I would love to see all of your lovely faces, but it's just going to be an audio call today. What we're going to do, we had a call like this last week with our EDO CEOs. What we're going to do is we'll take questions at the end. If you have a question, if you highlight over participants, there is a point where you can raise your hand. If you will click on that icon, raise your hand, I will recognize you, then unmute and your audio and ask your question to Clark. So, and if you're on a phone where you cannot type in, my cell number is 601 278 4740. Again, 601-278-4740. This worked well last week. Somebody texted me a question. I was able to ask our presenter the question. So without any further ado, and I know your time is valuable, I want to just briefly introduce Clark Jackson. And Clark, while I'm introducing you, if you'll go ahead and pull up your slides, that would be great. Clark is the senior manager for the Southeastern region, which is made up of 8 states, Alabama, Florida, Georgia, Mississippi, North Carolina, South Carolina, Tennessee, and Virginia for the U.S. Chamber of Commerce. Clark has been with the actually, Clark, I'm not sure exactly how long you've been with the U.S. Chamber, but you have had some experience in the health field with the National Multiple Sclerosis Society, as well as a connection to Mississippi, working as a healthcare policy aide for Senator Roger Wicker. Clark is a graduate of the University of Mississippi. We appreciate having Clark here. We appreciate the U.S. Chamber. I learned a great deal about the U.S. Chamber as I went through IOM. I have been amazed and heard numerous people say the U.S. Chamber of Commerce information that they've been putting out over the last few weeks is unbelievable. So we appreciate that, Clark. I know that Clark will give her presentation. Hold your questions to the end. And if Clark is unable to answer your question, we will make sure that we get it to the right person. So Clark, welcome, and go ahead.
Thanks, Mary. I appreciate so much you having me on today. I know that these are really uncertain times, and I'm more than happy to be here and lend a little bit of knowledge about what we know about the Federal CARES Act and how it can be beneficial for small businesses in particular. So I'll go through my slide deck, and as Mary said, when I'm finished, I'm happy to answer as many questions as I can. And then those that I don't know the answer to, I'm happy to get the answer for. So I'm gonna not do my video while I speak, but I'll come back for the Q&A. Okay, so just to give you an idea of the scale, this is a $2 trillion package. It's just under 10% of our regular GDP in our country. This package is designed to be robust because the idea is that this is the bridge that helps us avoid a prolonged recession and downturn, and allows that once regular commerce can begin resuming, we can go back to normal commerce. In addition to the $2 trillion in face value, there we go. In addition to the $2 trillion in face value of the package, because some of the funds can be used by the Federal Reserve, it can be leveraged to provide an additional $4 trillion in support of the economy. We'll talk a little bit about the individual provisions, perhaps the most important, which is the automatic payments that the federal government is making to the individual taxpayers. They'll begin the process of direct depositing these funds to taxpayers across the country. The amount is $1,200 per individual, $2,400 for joint returns, plus $500 per child. And it begins to phase out for incomes of $75,000 for individuals and $150,000 for joint income. Now, we already know earlier this week, we have over 10 million initial unemployment claims that have been filed. So as much as we may support at the U.S. Chamber and the federal government and local chambers support businesses, we're going to have a rise in unemployment almost irrespective. So this package includes some fairly robust expansions of unemployment benefits. Most importantly, most restrictions on unemployment, eligibility for unemployment. So remember, if you go through unemployment, applying for assistance, there are all these qualifications about how long you've been employed, how long you have to wait, etc. So those eligibility requirements have been amended as it relates to the coronavirus. In addition, the federal government is providing another $600 per week on top of the regular state benefit through July 31st. States simply have to agree to accept this additional benefit for their residents. A lot of questions have come up about whether or not individuals will remain on unemployment, particularly given this enhanced benefit. So it's important to remember that eligibility ends when an individual can return to work. So if an employer is reopening and calling back employees, and that employee is available to work and then they choose not to work, their individual eligibility for unemployment ends. So how do you access this? This still goes through your state unemployment office. This is not something where you'll go to the federal government. So you'll go to your state unemployment office for these unemployment benefits. So let's talk a little bit about the major provisions for employers. And we've really broken these down into three groups: the provisions that are available to all employers, the provisions that are available to larger employers, and then the small businesses, self-employed, independent contractors, and nonprofits, which is really where we'll spend the bulk of our time today. We'll start with the provisions that are available to all employers. The first is a payroll tax provision for employers who pay payroll taxes. So think about this. Everyone who's writing a check to their employees, after you write that check, you normally write another check to the federal government covering the payroll taxes for both the employee and the employer side. Under this bill, an employer may choose to delay their payment of their portion of the payroll taxes, which is 6.2% of Social Security wages. They can delay paying that between now and January 1st, 2021. If they choose to delay that, they have to pay 50% of the accumulated amounts that they would have owed by December 31st, 2021, and then the remaining 50% by December 31st, 2022. Now, there's an important caveat here. This is generally available to all employers except if you've had a loan forgiven under the Paycheck Protection Program. Now, this is the small business loan program we're going to talk about in a few minutes, so you can't do both. Other tax changes that are important: net operating losses, or NOLs. If you have a business who has an operating loss and you want to be able to use that against prior taxes paid, now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back 5 years. This also applies to pass-throughs and sole proprietors. So if you're a business, and this is primarily for corporations that have AMT credits, you can accelerate the recovery of those as well. You also have the opportunity to increase your interest deductibility from 2019 and 2020. And importantly, for restaurants and retail establishments who in the past couple of years may have made investments in their property, they can accelerate the recovery of those as well. All of these provisions are really centered around one idea, which is improving liquidity for employers. At the moment, when employers have no income or revenue coming in, it's really hard to pay the bills. And so all these provisions give employers greater access to liquidity. It's not so much about reducing overall taxes as it is about timing. So giving employers more access to the cash they have today to be able to pay their employees. Another provision that's available to all employers is the employee retention credit. Now, this is a late addition to the Senate bill. The earlier draft included this provision. So as a result, it hasn't gotten as much attention as the Paycheck Protection Program, for example, but the retention credit generally applies to all employers. We're talking about businesses, but also nonprofits, for example, who are fully or partially shut down as a result of the coronavirus, or have had a 50% drop in their gross receipts in a quarter, and eligible for this until gross receipts get back up to 80% of their prior year's amount. So think about it this way. This is designed to help employers who've shut down or lost revenue, but who continue to pay their employees. So how much is this worth? It's 50% of the wages paid by the employer, up to $10,000 per employee. And it's a fully refundable tax credit. So think about it as a $5,000 tax credit available to the employer per employee. There are some special rules for employers with more than 100 employees and employers with less than 100 employees. So if you have more than 100 employees, the benefit only applies to the employees who you are paying but are not providing services. So think about it this way. Your business is shut down. You've had this drop in revenue. Your employee is not working. They're not teleworking, but you continue to pay them. You can access this credit as a benefit and recognition of the fact that you paid them. If you have 100 or less employees, the requirement that they not be providing services doesn't apply. So it's available to all employees you pay during the eligible period. And again, the eligible period being when you're shut down or when you have a quarter with this drop in gross receipts relative to the prior year. So importantly, again, here, the Paycheck Protection Program, this is the small business loan grant program. If you receive one of those loans, because it can be converted into a grant, you cannot take advantage of the employee retention credit. So you can't do both employee retention credit and the PPP program. We understand that employers may have cash flow problems. And one of the things that for the employers who are taking advantage of this is we expect Treasury will be providing guidance that will allow employers to get an advance on the payment of the credit. So it'll help them pay employees today. Okay, so let's talk a little bit about medium and larger employers, and that's generally employers with more than 500 employees. This bill included in total $500 billion to the Treasury Department to support loans, loan guarantees, Federal Credit Reserve facilities. Now, Federal Credit Reserve facilities, you may have heard about these before. These are things that the Federal Reserve is creating, for example, to support commercial paper, money market funds. They do this as a regular course of business when we have a financial crisis. So they were used robustly, for example, in 2008. 454 billion of that 500 billion is directly for businesses at large. So there are some special programs included for the airline industry and critical national security businesses that make up that $6 billion from 454 to 500 billion. We expect in the coming days, really either today, maybe even tomorrow, we'll see the Federal Reserve issue more guidance about these credit facilities and actually launch them, including the terms and conditions. So remember, this is not something or situation where most likely a company is going to go to the Treasury Department or the Federal Reserve. Instead, what the Federal Reserve is going to be doing is supporting financial institutions in the United States for them to make more loans available. So there are some restrictions to go along with this in exchange for accepting the benefit. It could include stock buybacks by the company, so long as their loan is pending, and then for an additional year. And then also some limits on increasing executive compensation. So this next section is really aimed at small businesses, self-employed, independent contractors, and nonprofits. So the provision that's getting the most attention is called the Paycheck Protection Program. It's $349 billion in loans for small businesses. That's generally defined as employers with with less than 500 employees, the 501c3s, the self-employed, sole proprietors, and independent contractors. A way of thinking about this is if your business is generally qualified for an SBA program, you're going to qualify under this program. And in addition to that, some businesses who would not qualify have been added to the list. So that includes, for example, independent contractors and the self-employed. It also includes restaurant and hotel folks who would otherwise be ineligible, because if you add up all of their locations, they have more than 500 employees. But under this bill, it says we're going to judge you in the accommodation and food services business as on a per location basis. So don't automatically assume because you're not eligible for a regular SBA program that you're not eligible for the Paycheck Protection Program. So how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. There's a formula to calculate average payroll. And then once that's calculated, you multiply it by 2.5. The only exception here is that your loan can't exceed $10 million. Where will you get this loan? So we saw on Friday that the Treasury Department released a lot of new banks that came on board in order to give these Paycheck Protection Program loans. But that's in addition to already existing SBA 7A lenders who are automatically qualified for this program. And I'll go ahead and address this because I've gotten this in a lot of webinars. We know that there's been some glitches, to be kind, with the programs rolling out. However, we know that there's already $90 billion that have been loaned out to small businesses around the country in the past 4 days. So they really are working through the glitches. The majority of banks are really, really wanting to get this money out to small businesses. So if you've heard of someone who's having an issue with a bank, they tell you they've reached their cap. I know Wells Fargo is saying they've reached their cap. Some of the other major national lenders are saying they've reached their cap, or they're prioritizing existing clients. They're working through that. Treasury has relaxed some of the guidance on the caps, allowing some of the bigger banks to loan more than they would have normally, reducing their risk behind that. And then you'll also see a lot of community banks, local banks that are coming on board now and within the next couple of days. And mostly because this is a very generous loan program. So it's 100% backed by the federal government. So there's no risk to the bank. And not to mention they get a really good percentage of the loan. So it's very advantageous for as many banks as possible to get on board for this program. We've also heard, since there's already $90 billion that have been doled out to small businesses, that we're going to run out of this $349 billion pretty soon. And so Congress is already in talks about how they increase this amount. So I would encourage you, or encourage your members or your businesses to get in as quick as possible, but also know that Congress is working to extend the program as well. So I think there should be enough money to go around. Okay, so back to the program. There are very minimal requirements as far as underwriting these loans. There's no collateral required. There's no personal guarantee required. And a really unique feature of these loans is that these loans can be converted into grants based off of what your borrower spends the money on. So the way the bill is laid out is it looks at the 8 weeks of your expenses after the date of the origination of the loan, and you get to tally up everything that you spent on payroll, you spent on rent for the business, interest on mortgages tied to the business, and what you spent on utilities, and you can get dollar for dollar forgiveness up to the amount of your loan. And of course, your forgiveness can't exceed the amount of the loan that you borrowed. One new stipulation that they included in the interim final guidance that they put out this week is that the non-payroll expenses, so utilities, interest on your mortgage, rent on your business, those got to exceed 25% of the loan forgiveness. So 75% of your loan really has to go towards your payroll expenses. There are some conditions for your loan forgiveness, that it's reduced proportionately if you reduce the number of employees that you have relative to a benchmark period. So either the previous 12 months before the origination of the loan, or if you weren't operational in 2019, you can use from January 1st, 2020 to February 29th, 2020. The loan forgiveness is also reduced if you reduce the hours of the wages of your employees making less than $100,000, more than 25%. And that's a good note about $100,000. In your calculation of payroll expenses, you can count the first $100,000 that you paid an employee, but nothing beyond that. So this is really targeted at middle income earners. Employers can also avoid a reduction in the forgiveness, because we know of a lot of employers who've already had to lay folks off or reduce the hours or wages of their employees to help them get through this difficult period of time. If they bring back and or restore those employees by June 30th of this year. So think about it this way: you've laid off employees, you've reduced their wages or hours to help you get through this period of time. If you made those reductions between February 15th and April 26th, you'll need to restore those employees and or bring them back up to their wages by June 30th in order for your loan to be forgiven as a grant. Additionally, after April 26th, you can't make any changes to the number of employees or wages beyond 25%. There's a 25% little wiggle room in there. After April 26th, you can't really make those changes until after June 30th in order to be forgiven. Now, if you laid off an employee prior to February 15th, and you do not have to restore them in order to qualify for forgiveness. So again, here, what the government is incentivizing is it wants to give money through small businesses, money for them to keep paying their employees. we often get asked, what if the business is shut down, or you happen to be in a place where the government has said only essential businesses can be open. That doesn't matter for the purposes of this loan. So what the loan looks at is, after taking out the loan, were you still paying your employees? Remember, the goal of lawmakers in creating this program was to provide assistance essentially in the form of grants to small businesses and encouraging those small businesses to keep paying their employees. So remember, most employers, they also offer some sort of health insurance benefit or retirement benefit. So keeping them on board at your company not only gives them access to all those benefits that they had before, but it also enables you, when the federal government says we can go back to work, you can resume commerce immediately and open your doors the next day, as opposed to calling back employees who have gone on unemployment. Okay, so the next slide is this is our coronavirus emergency loan guide, and you can find this at uschamber.com/SB loans. I cannot say enough about this guide. They've used it on Good Morning America. SBA is sending people to this guide. It really, really is helpful in order to get you prepared to go to your lender for the PPP program and get these paycheck protection loans. So I'm going to go through a little bit about what it shows you. So it really walks you through the process to get you ready. So, am I eligible? What will lenders be looking for? Including here, you can see there's a hyperlink to the application. So you'll need this application as well as your payroll documentation, but it also walks you through what a lender is not looking for. And then, how much can I borrow? So it goes through the average payroll costs and how you calculate that up, including what's included in payroll, what's excluded from payroll. And then if you look on the right side, it even goes to non-seasonal versus seasonal employers. So seasonal employers qualify for this program as well. And then the fourth page goes through how this loan is forgiven. So what you can spend the money on, and then of course there is, for whatever reason, a reduction in your FTEs, or if you had to reduce wages, how you can calculate that reduction from your forgiveness. So it really walks you through this process 100%. So I can't tell you again, please use this resource. So it's at uschamber.com/SB loans. One of the things we're really encouraging at the U.S. Chamber is to just make sure and go through all of these programs and understand whether or not you're eligible, and think about what the loan forgiveness may look like in your situation and on the back end as you make a decision whether or not to apply for the PPP program. Okay, so this next provision that we're going to go through, this is also for small businesses, the self-employed, independent contractors, and nonprofits. And this is the SBA's Economic Injury Disaster Loans, also known as EIDL loans. Now, EIDL loans have been around a long time. If you happen to have been affected by a hurricane or a tornado, for example, you might have applied for and received an EIDL loan. So who's eligible? Small businesses and nonprofits, including faith-based. So there's no restrictions here on the types of nonprofit. It's an entity or nonprofit that has fewer than 500 employees. And again here, sole proprietors, independent contractors. So this is an actual loan. This is not a loan that in general converts to a grant. You can borrow up to $2 million in working capital that's repaid over 30 years. And you can see the interest rates there on the screen. If you take out this loan, payments are deferred for up to a year, so you don't have to immediately start paying this loan. They made it easier for individual businesses to apply. So your loan is going to be based on your credit scores. You don't have to immediately produce tax returns. You can get up to $200,000 without a personal guarantee. There's no collateral required for $25,000 or less. Beyond that, there's just general security interest, or sometimes it's secured with real estate, but they're really trying to move away from real estate in this particular instance. This is an important feature that is brand new as a result of the CARES Act. And so this is the $10,000 emergency grant. So if you're applying for one of these EIDL loans, one of these injury disaster loans, you can request that you be provided an emergency grant, which is supposed to be provided within 3 days. And we've been in a lot of talks with SBA, and we understand that a lot of businesses have applied for this and not received the emergency grant within 3 days. But what we've been hearing more and more from SBA is that after you hear back from SBA, which may take a few days, after you hear back from them, you can expect the grant within 3 days of hearing back from them. So another important feature is this $10,000 grant. The bill, it details what you may use the grant for, but there's no requirements listed in the bill. So this $10,000 grant doesn't even have to be repaid if you're denied your loan. So you're applying for the loan, you request the emergency grant, you receive it, and then you're denied the loan. You still don't have to pay back the $10,000. So you should think about this as essentially an emergency grant for small businesses. There's an important interaction with the Paycheck Protection Program that we just talked about. So importantly, for example, if you end up with both an EIDL and a PPP loan, and you generally would end up with those because you've already received an EIDL loan, and now the Paycheck Protection Program is being set up and you're applying for those, then the way it works is you can roll your EIDL into your PPP. You just need to talk to your lender about how you do that, and how much can be forgiven. But just know that you can't get double forgiveness on that $10,000 grant that's included in the EIDL loan. So if you get a PPP program, that $10,000 grant is going to come off of the forgiveness of the PPP program. There's also some requirements with respect to the Paycheck Protection loans that you can't double dip. In other words, you can't take out 2 loans to pay the same bill. So if you're thinking about both of these, you're going to want to think through those restrictions. Now, there's a lot of things that you can pay for. You can use the EIDL loans to pay for that's not rent, that's not payroll, that's not interest on your mortgage, that's not utilities. So make sure if you do apply for this EIDL loan that you're using the funds for other things beyond rent, payroll, interest on your mortgage, and utilities, because you cannot be double forgiven. So if you use your Paycheck Protection Program loan, and then you also use EIDL loans to pay for some of those things, you're not going to be forgiven the full amount under the Paycheck Protection Program. So just make sure and really go through both of these programs and see what works best for your business. Don't assume that you can sort of stack these programs on top of each other. What they've really done is they made the Paycheck Protection Program the most favorable. And then they tacked on other programs that don't avail themselves to the Paycheck Protection Program, and that includes this EIDL. So you don't apply for this forget your local bank or a national bank. You apply for this on SBA's website at sba.gov. This is the loan that chambers and other 501c6s can apply for. And just as a caveat here, since we have a lot of chambers on the line, we've heard from some local SBA reps that they don't think that 501c6s are included in the EIDL program. However, we've heard of chambers who have applied and already received the funds. And so our attorneys are working with SBA attorneys to make sure that there's some clarity that goes into the final rules, just to make sure that 501c6s are included. But if you're hearing from your SBA folks that your 501c6 or your chamber or economic development organization is not eligible for a PPP program, let me know, and we'll see what we can do. And so I just want to wrap up quickly with saying, again, please visit the U.S. Chamber's website. Our homepage, www.uschamber.com, has been turned into our coronavirus page. So everything that I talked about today, 1 page is on the PPP program, 1 page is on the EIDL loans, 1 page is on the retention credit. All of these things are included on the U.S. Chamber's website, and I'm also happy to get my slides to Mary that she can share with you guys, so you can have those as well. So I'm going to stop sharing my screen.
Okay.
I think we're on your screen now. Mary, I think we see your screen, or I do.
That's Jan Collinson's screen.
Okay, there's somebody's screen.
Dan, turn your screen off. We are view sharing your screen. We do not want to do that.
But I am glad to see that you got Scott's newsletter.
That's right. We're glad to see that she has that.
Hey, Dan.
Thank you, thank you, thank you. At this point, we did before we'll do it. I believe you answered, discussed questions, about the 501c6s and
Yeah.
everything. Where any hope at all about whether they'll be included in the next round? What can we be doing? The majority of us are all 501c6s. So what can we be doing, Clark?
So what you can be doing is calling Senator Wicker, calling Senator Hyde-Smith, calling your member of Congress, your House member, telling them how important it is for 501c6s to be included. I do know that I was on a call today with a member of Congress from Alabama, and he was saying that since the loan program, the PPP program is running through so quickly, also the emergency grant funding is run through really quickly, that they are looking at doing an emergency funding package that'll just add more money into those programs, but they're not expecting a new bill, and they're not expecting to even go back to DC to vote on it. So getting that fix legislatively included in this next, what we would call round or package, is not likely. And we're working our hardest to make sure, along with ACCE, I know they're really working on this too, to make sure that 501c6s are included. This is a little bit of an issue of money. It's a little bit of an issue of politics. So, they see 501c6s as lobbying organizations. And so we're doing our best to really clarify that, yes, the U.S. Chamber is a lobbying organization. Mind you, we have more than 500 employees, so we wouldn't even qualify, but a local chamber is really not a lobbying organization. They don't even primarily do lobbying. So, and then we're working on a legislative fix that maybe includes just some language that maybe would exclude, say you have a staffer on board that is a lobbyist, like it would exclude their payroll costs in the PPP. But we're working through this anyway, in every way possible. We're in contact with leadership on this, and we're working with local chambers to help get out the message. And you can really, really be helpful if you reach out to your members of Congress and encourage them to please include you. Any sort of anecdotal story, I had to lay off employees, or I'm going to have to reduce the wages, or we're going to have to close our doors. Those are all really helpful. So I'd encourage you to do that.
Okay, and we'll share with you guys. The American Society of Association Executives has a great page that they just sent out. You can sign on with them. The same thing that Clark was sharing. Some of you guys did this with the first round when Scott and Waller and I sent out for you guys to get letters, and I think we did bombard Senator Wicker and Senator Cindy Hyde-Smith's office. I got the messages back. But we want to do this again. So Gwen and I will get that out to you, because the same process that Clark just shared is what ASAE and ACC are pushing. We just need to have a unified voice on that. Had another question that was typed in. Is this for wages only, not total payroll?
So again, www.uschamber.com/SB loans. It lists everything that you can include in payroll and everything that you have to exclude from payroll, but it does include your benefit packages. So healthcare, retirement, those sorts of things you can include in your payroll costs. But I'd encourage you to look at that. It lists everything out that should be included in your payroll calculation.
Okay. Another question that was typed in, and if you have a question, I'll try to monitor hand raises as well. What can you share about the terms and conditions for the forgiveness provisions and the end?
Okay, so I can try to clarify that. I think that's what they're asking. So In order to be forgiven for the Paycheck Protection Program, the only stipulation is that you cannot reduce the amount of full-time employees or FTEs, but that also actually includes part-time, any employee designation. You can't reduce the number by more than 25%, or you can't reduce the hours or wages or their take-home pay more than 25%. And so understanding that some folks have already made those decisions and already laid people off, they're giving you till June 30th to make it right. So you have until June 30th to bring all those people back or restore all the wages back to what you were paying them relative to a benchmark period. So your period would be if you were in operation in 2019, the previous 12 months, or if you weren't in operation in 2019, you can use January 1st through February 29th. So whatever your payroll looked like those months, by June 30th, you must bring it back up to that number. Now, it does give you the wiggle room of a 25%, and that's if, you have to fire somebody because they don't show up to work. It has nothing to do with coronavirus. It just, these kind of things happen. Somebody quits, somebody moves on. So there is a 25% wiggle room there, so that you're not penalized if something like that happens. But in general, you have to bring your employment back up to full wages, full employment by June 30th in order to be forgiven. I hope that's clear.
Okay, and if it's not clear, please again go back to the U.S. Chamber or reach out to us, and we'll get the question again to Clark. There's another question. Are there any mandates in the PPPL that require the borrowing entity to provide paid sick leave? And if so, how long does this mandate last?
So there is a mandate that wasn't included in the CARES Act. It was included in the Families First Act, which is the bill, what we call Phase 2 bill, which was the second bill that Congress passed to address the coronavirus. It includes some paid sick leave and family leave requirements for employers with less than 500 employees. So that's a requirement withstanding the PPP program. That's something that all employers under 500 at this point in time have to be following. So it includes 10 days of paid sick leave. And that's for if you're ill, if you're quarantined, if you have a family member you need to take care of, or if a child is at home or because of a school or daycare closure. And that paid sick leave is paid by the employer. However, it's fully refunded by the federal government. And then there is, in addition to that, Family Medical Leave Act. And that initially, or the way the Family Medical Leave Act writes is 12 weeks of unpaid leave. And the way this works is it is 10 weeks paid family leave. However, it can only be used if a child, to take care of a child whose school or daycare has been closed. And then both with paid leave and family leave, the employee cannot be able to telework. So it can't be a situation where they're teleworking as well. So, and that includes staggering their hours or changing their hours. So, but yeah, so any employer at this point under 500 employees has to provide both that 10 days first of paid sick leave and then an additional 10 weeks of the family leave.
Okay, at this time, I have a hand raised by Dale. If you would unmute your phone or computer and ask your question if you're still there.
Hi, Vidal Blankenstein here. I have a question. I'm an S Corp, small business, 100% owner, 3 employees, counting myself. My company has a $50,000 loan that it pays about $2,200 a month against. Is this in part of the loan forgiveness?
The way it works is, and I'm going to read this because I actually had this question earlier and I didn't know the answer. So where is it? If you are an S Corp, Do you use a payroll company?
Yes, I do, but the loan is not through the payroll company.
Okay, so the way the PPP program works is you have to take a salary. So if you don't take a salary, the answer is no. If you take a salary, the answer is yes.
Okay, I do take a salary.
Okay, well then you qualify for the PPP program. And then from here, I would tell you to talk to your lender about any details about how you would work the average payroll costs and all of that.
Okay, but that wasn't the question. I understand all of that. The question was the loan payments that I have for the company. The company has a loan, owes $50,000, and they are currently the company is currently paying a note of about $2,200 against that loan.
Okay.
So is there loan when you say you talked a lot about loan forgiveness, I didn't quite know.
Oh, sorry. Okay. So the loan forgiveness is for this PPP loan.
Okay.
So if you qualify and you take out a Paycheck Protection Program loan through your local lender, if you follow all of the stipulations included in the law, then you can get forgiveness for that loan.
Okay.
Now, if you have an existing debt, you can look into the EIDL loan, which will give you up to $2 million in working capital if that's something that you're interested in looking into. Does that answer your question?
I sort of. So it's the EDIL that will give us some. So where that loan the line of credit figure, let's say.
Yes.
That would be in the SBA EDIL component of this.
That's right.
Okay.
So you would need to go into SBA.gov to see if you qualify for an EIDL loan, and that loan can be used, I guess, to pay for your debts that you have existing.
And does it make any difference who that loan was from?
I'm not sure about the specifics of it, but SBA.gov, when you go on and look on EIDL loans, it'll tell you all the things that you can use the EIDL loan to pay for.
Okay, well then we will research that.
Great.
And so is there an SBA office in Mississippi? Can I call anybody?
Absolutely. I don't, but Mary, you may know where your local.
We can, Vidal, if you'll just email me and we'll get that information to you.
Okay, great.
Thank you.
Okay, thanks so much. Y'all look cute, by the way.
Well, thank you. Okay, let's see. I've got a couple on chat, and then we'll take a few more because they're busy. The U.S. Chamber has been so gracious to help us to set this up. What all can you do with the IDL loan? If businesses were looking to expand or purchase additional property and build additional facilities, are they allowed to use these funds instead of cash on hand? Most businesses are not eager to use their cash on hand right now.
So I'm not sure what all of the things that you can use the EIDL loan for. Again, go to SBA.gov, go under EIDL loans. It will list everything out that you can use an EIDL loan to pay for. And I know that it includes payroll and rent and utilities and that sort of thing. But there's a whole host of other things that you can use an EIDL loan to pay for. So I'd encourage you to go there and check for your specific instance here.
Okay, and I think you may have addressed this a little bit. What about small rural churches? How can they be helped?
So 501c if you're a C3, you qualify for the PPP program. You also qualify for an EIDL loan. So you'll need to look into which one is best for you.
Okay, and then there was a poster that was sent out that talked about sick pay and leave as related to COVID-19 circumstances. The email I received stated that it had to be posted by certain employers. Can you define certain employers?
The way the law was written was that all employers with less than 500 employees must provide both the paid sick leave and the 10 weeks of paid family leave. Of course, there are the requirements that you have to fit, whether it's, your child is, at home because of a school or daycare closure, or you're sick, et cetera. There was an exemption that was included where you could exempt your business if you had less than 50 employees. However, you have to be able to prove that it would threaten the viability of your business in order to provide this benefit. You have to do that with the Department of Labor. You have to make your case. And so if you're interested in that, I'd encourage you to go to the Department of Labor's website, and they have guidelines on there, and you can look into whether or not you are exempt or not. But you do have to prove that. It's not just an automatic exemption.
Great. Thank you, Clark. And then someone, I believe this may be a comment that may help with what was the earlier question. They had a comment on the chat that said, I had a client who got their existing lenders to waive payments for 6 months outside the coronavirus funding. So maybe going back to your current lenders, if you've got a loan, and see if they'll work with you individually. Any other questions through chat or raise a hand? I don't see any. Clark, we truly appreciate your time. I know you guys are working more than 24/7, if there could be.
It's slowing down.
It is. I mean, you can tell by the number of emails we're getting. But we do appreciate it. We appreciate your time. To those of you that were on the call, I appreciate it. If you have suggestions for well, leave it to Curtis to have one more statement. Let's see. It said from SBA's website on IDL loans, Curtis is our researcher here.
Oh,
the
good.
SBA can provide up to $2 million to help meet financial obligations and operating expenses that could have been met had the disaster not occurred. Your loan amount will be based on your actual economic injury and your company's financial needs, regardless of whether the business suffered any property damage. I don't see an expansion qualifying, but I'm not a lender. Thank you, Curtis.
Thanks,
you
Curtis.
Guys, this is what your membership's for. Go into your membership portal, put a question out there, or let Gwen and I know. We can shoot it out. We've done that. We've had to reach out to MDA with people that have particulars on the companies about paying back either loans or getting their information into the Department of Revenue. So we're here to help you. Anything else that we can do, just text or email Gwen or myself. Clark, again, thank you for giving us your time. All you guys, thank you. Stay safe. We're praying for you. I pray that the rest of your week will go well with your Holy Week, and just many blessings to you all. Thank you.
Thank you.